All right, good guys. Good morning, or actually afternoon for you people on the mainland. It's about 6 o'clock in the morning here in Honolulu. We're just entering. We're about 15 minutes into lunch, New York time. Interesting morning this morning, right? We had to bail on that Apple trade. Everything went the way we wanted to. Right? Great earnings report was up $4 in pre-market. Boom, the market opens. Guess what? The bad boy is red. So we bailed on that. It ended up being about anywhere between a 50 to 60% loss on that trade. And it happens. And that's what I want to talk to you guys about today. And it's something that we really push with our members is the psychology of trading. Nobody ever talks about this, right? You see it all over the internet, trading, buy options, make $1 million. I churned X amount of money into some ungodly sum just by trading options and stuff. But nobody ever talks to you about the psychology of the market. And really where the psychology of the market comes in is when you lose trades. What do you do if you lose 4 or 5 trades in a row? Well, what do you do? Do you just quit trading, pack it up, go buy some Bitcoin and hope for the best? No. Trading is something that you really have to have thick skin and you have to have a psychology to it. You have to understand that there's times when trades just don't work. Look at this Apple trade, right? You buy 134 calls. The thing's trading at 134 the day before. It's at 138 in pre-market, right? And all of a sudden it opens up and you're down 40%. And sometimes it just doesn't work, right? Great earnings report. Goldman Sachs coming out and saying, we were wrong about Apple. You should own it. Jim Cramer on CNBC, right? Pounding the table. Man, we were wrong about Apple. This is a great company, blah, blah, blah. And it just keeps going down, right? What does that do to this? It does some funky things to it, right? It can really freak you out. And that's what we push with our members is that, look, if the lion doesn't hunt, the lion doesn't eat. We are traders. We are wealth builders. We don't live and die on one trade. And that's the first thing to the psychology of trading. Remember, if you're living and dying on one trade, if you're living and dying on 3 or 4 trades, you're not managing your money wrong. Everybody talks about risk management. Risk management simply is how much you put on a play. Think about it. Right? Risk management. There's always risk in every play. There's no guarantees in the stock market, and we know that. But how do you maintain that? All of a sudden, maybe you hit 4 or 5 trades in a row and you're feeling good and you're thinking, man, this stuff is simple. It's like shooting fish in a barrel. And so you go big. You go 70% of your portfolio on the next trade. It just gets crushed. All of a sudden, you've lost 70% of your portfolio. That's where your risk management comes in, how you manage your bets. It goes back to the old days with the professional gamblers. That's really when I was in high school and college, early college, got my start in trading. I like to gamble. And it was all about risk management, right? It's how you manage the VIG, right? Whatever the line is and stuff like that. Same thing with trading. You see how we have a set amount we play on every play, and we never divert from that. The only time we divert from that is when we do a play outside the system, like a short-term play like we talked about with the Visa trade and stuff like that, where we're just taking a little poke. We might just go maybe a couple $100, maybe $1,000 on a huge portfolio. For example, when we did that VIX short-term trade, that's your money management. Your risk management is, we knew it was a short-term trade. We know that things can go wrong regardless. The best laid plans of mice and men, right, can go wrong. But a $350,000 account, we bought $1,000 worth. Right. So you see how we managed that. It wasn't a normal system play. On a normal system play, we'd go about 3 to 5% of the portfolio value. But remember, if you just do 5% on every trade, you can lose 20 trades in a row, right? And still be in the game. Who's going to do that? If you're losing 20 trades in a row, click that link below. we've had a tough first quarter, man. I'll be the first one to admit it. We've had a tough first quarter. We came off that big run right in December, and we thought inflation and stuff was going to kind of creep in, so we were short on things, and it kind of got us off to a bad start. Things started to take semblance recently, right? We're down about 40% for the year on option trades, but on our portfolio stocks, we're also up about 70% on the year. So you see how, again, managing risk. How do you build your portfolio? Do you put it all in options, the most risky thing, time sensitive thing you can put? Or do you take your portfolio, section it, and get some great stocks in there with great dividends and some compounding that you don't have to manage every day? That will grow through osmosis, right? They buy themselves every 3 months. If it's down, it'll buy itself cheaper. And here's the great thing: if it's at highs and it's just rocking, you can take that dividend in cash, right? And you can actually put it to work somewhere else. So it's all how you manage risk, guys, but it all starts up here. You can't get defeated. You can't get deflated. And you got to understand that you're managing your risk. That's where you manage your mind, is by managing your risk, how you're diversified in your portfolio. We talk about it all the time. We started that slice portfolio, which is just partial shares, when Schwab came out and they allowed what they call slice stocks. I believe on Robinhood, you can do this for you cats out there with Robinhood and stuff. I believe you can do that on any stock, but a lot of your big brokerages a few months back, about a half year back, last July, got into this slice portfolios where you can buy partial shares of your favorite stocks. You don't have to have $1,000 to buy Amazon anymore. You can buy $100 worth and enjoy the benefits of the stock ownership. And so we took $400 and we bought and built this little slice portfolio. $400. That thing is just rocking. We've got stocks in there that have doubled. That every stock in there pays a dividend, and most of those stocks you've seen on the stock of the week. It's that easy. But you see how you manage your risk. And that's what I really wanted to talk to you guys about today, because the market's gone a little bit red after that nice start this morning. You think about it. Think about the logic behind what's happened the last couple of days. Microsoft blowout earnings, Tesla blowout earnings, Apple blowout earnings. Just across the board, we're having these blowout earnings, but the market is red. Why? Why are they selling Apple? Why are they selling Microsoft? Microsoft's down $4 or $5, maybe even more by the time this recording. Why are they selling this? This is going to happen. All your common sense, your best laid trades, sometimes they're not going to work. And that's your risk management. Manage your risk. And it all comes down to your mind. And it all comes down to doing things the same way over and over and over, and don't divert from that. Your next trade is always your greatest trade, but you don't put your greatest amount of money on it. Okay. And I just wanted to talk to you guys about that. Now let's get a little to the market. We started out like banshees, right, this morning with those great earnings and stuff, and it just couldn't hold on. Let me pull up CNBC here. We'll go take a look together. And share the screen. That's the button. Right, let's pop on over here. And you can see across the board, the markets are red right now. S&P cuts gain and is flat after touching a record. Apple turns negative despite blowout earnings and all this support coming out from Goldman and people like Jim Cramer and stuff. You even see some articles here. Cramer says investors are misjudging Apple, but it went red. What if you were long on Apple? Well, we were long on Apple. We own Apple both ways, right? We had that short-term play that expires tomorrow. We took about a 50-60% loss on that. Be honest about your trades, because here's the thing, guys. You do that, right? You go into this morning, everything's looking good. All of a sudden it turns upside down. So you think you start going on a wing, a hope and a promise. And you think, well, by tomorrow's close, it'll recover. And when you could have took 40% of your money back, 50% of your money back, instead you waited because you're being dishonest with yourself. And then you lose that too. then it becomes a zero trade, right? And you don't want that, right? You could have got half your money back, licked your wounds, got back on the horse and made some money. Well, that's what we did. And I'll tell you what we did. And like I said, this is what we teach, is the whole psychology of trading, the whole mindset, the whole managing risk and stuff. It's a total program. But we cashed out that Apple, got that money back, and guess what we did? We rolled it into some SPY puts, and those are working real well. We're already up about 35% on that trade. And you see, if that one wins, guess what? And it does 40, 50, 60%. Guess what? We already got our money back from the Apple trade. Again, it's all up here. We didn't get excited. We didn't get mad. We didn't get depressed. We didn't shut it down. We didn't go into fetal position with our thumbs in our mouth. What we did was we followed our system, right? And we stayed unemotional and stuff. So we'll see how that works out. It's been an interesting day, guys. It's been really an interesting day. We had a good GDP number, right? We've had blowout earnings. We're having all this stuff we talked about it yesterday and the days before. States are reopening. Things are starting to progress. That whole reopening trade is coming to fruition. But for some reason, your stock market's red today. And we'll see how things go from here, but it looks like we'll probably close the week on a little bit of a sour note. We're short the spider, so we don't care. Go down. Our long stocks, like I say, let me give you another example on the Apple trade. We also own Apple stock. That's one of our system calls, is when it went way back at split time, when it did the 3-for-1 split, we recommended all our members grab some shares, and most of them did. And guess what? Regardless of what happens with this short-term option trade, we are the benefactors of whatever happens with the stock going forward. We're getting dividends every 3 months. They're going to do a $90 billion stock buyback over the next however long it takes them. So you see how we did that. We had our portfolios built that yes, we have some good options exposure, but we also have the security blanket of some great compounding stocks in there, right? So we'll skin that fish one way or the other with Apple. And that's how you do it, guys. And it's being very, very, very systematic about it. So, and that's why we ask people for such a commitment, 3-year commitment. It takes that long. Look, over 40 years, man. This is not even close to the worst that we've seen over all these years. But it's the psychology. So just take that to heart, guys. Make sure you're in the right mindset. Make sure that you protect that mindset by controlling risk, okay? You want to be able to lose a trade and be able to just dust yourself off and just get right back on the horse. And you can't do that if that trade destroys your portfolio. So let's kind of, like I said, it's kind of a funky market today. I'm looking at it, and the Dow just went green again. The S&P's flat. The NASDAQ's really struggling again. But it's just a real funky day. We're in the middle of the day at lunch, and we're going into Friday tomorrow. Inflation is probably more serious than what the Fed is letting on, and your analysts and stuff like that. You just see a parade of them going by on TV, whether it's Fox Business News or CNBC or whatever. Is there still a Bloomberg? I don't even know if there's still a Bloomberg Financial. But you see that they're parading these opinions that inflation is don't worry. Well, inflation are like recessions. You know what I mean? You don't worry until you're in one, right? Anyways, guys, let's call it a Thursday, okay? Let's see how the market shakes out the rest of the day. Let's go take a look real quick together where we're at as far as the market. And you can see that S&P 500 just went a little green. The Dow just went a little green. That NASDAQ's still struggling. The VIX isn't giving you that big warning sign yet, where we've talked about that before. that $20 is really the inflection point on the VIX. If it gets over that 20, you're starting to get into some serious volatility. If it gets up to 40, you're in a full-on sell-off. But as long as it's under that 20, it's still just kind of a bouncy market, directionless market right now. Other than that, guys, the energy play we've been talking about is just blowing up. That one is a bright spot for us for the day. You can see oil's pushing that $65 a barrel. We talked about it. We think we'll get 70 by the end of next week. We think we'll be up at triple digits by summer. We also still stand by our call that we get a rate hike by the end of the year, and that'll be inflation driven. So let's kind of take the rest of the day easy here. You can see things are kind of bouncing a little bit right now in the middle of lunch. The afternoon will kind of tell the tale on this. Other than that, guys, I just don't have a whole lot. I just wanted to I just wanted to share that with you guys about risk management and controlling your emotions and staying with your program. Yeah, because you see how we deal with a loss. We review it so that we know why we lost. Sometimes you just have to throw your hands up and say, look, the trade just didn't work, which is what this Apple trade looks like. Everything went in its favor except for the price, right? Except for the price action. Even we were watching CNBC yesterday, and we kind of even got a little more confident in the sense that they were talking about how the calls all went very bullish on Apple, but yet it still just couldn't pull it out. You never know, right? I mean, it could reverse the rest of the day and stuff, but we're out. Other than that, guys, we went a little short on the SPY. We still got the Ford contracts. We're going to hold on to those. Let me kind of close with the Ford issue, because there's kind of an interesting earnings report. Everything went well with the earnings report yesterday, except they talked about that they're going to lose about 50% of their production over this quarter. They also said something that the market didn't notice, and what that was the middle of this quarter, that they're going to hit the bottom on that, and it's going to actually start recovering the rest of the quarter. You think about it, we're on the last days of April, the first month of the quarter. Quarter's 3 months long. Guess what happens on the 1st of May? We start getting into that middle of the second quarter, and that's where it should trough, and we should start getting good news and stuff, the opposite of what we're getting. You buy when they sell, you sell when they buy. We didn't panic on the trade. We've got a little option play going on it, but we've talked about how we wanted to add Ford to our slice portfolio. And it looks like we're going to get it under $12. All right. We'll take it. We're not living and dying on every tick. We're methodical and stuff like that. And we'll get positioned for a nice move from Ford. Other than that, like I said, the energy plays are going crazy. ET, which was a stock of the week, is just blowing up. XLE is just going off, and so is Suncor, which was another stock of the week. So there's a lot of good free information out there from us. Anyways, all right, let's call it a Thursday, guys. I'll see you guys tomorrow with the Friday update. Let's see how we close this week out. Let's see how the rest of the afternoon goes, guys. No reason to panic, no reason to freak out, no reason to get excited. Not yet. All right. Hey, you Bitcoin traders, I talked about it in our membership for you guys that are interested in Bitcoin with your stock portfolio. We started trading Bitcoin with some of the members a few weeks back, right? About 3 weeks back. Our big challenge was we're in Hawaii, and Hawaii's banned from like Coinbase and stuff like that. There's some rules that for some reason we're not considered part of the United States. It's almost like 1970 again. But we found a way. We found a way to get on an exchange, the Nexo exchange, and we've been trading. That's actually doing pretty good. And we're trading Bitcoin the same way we do our stocks, not our options. We're buying and we're holding. We're taking advantage of things like on Nexo, you get interest. On a Kraken, you can stake your coins and get some free coins. It's like having dividends. Nexo, one of the favorite parts of our days is every day we get an alert from Nexo. We got a little free Bitcoin, we got a little free Ethereum, and we got a little free right now we're in Stellar Coin for our little side coin there. You know what I mean? But we're playing it long. We're playing it long, right? If it's going to $1 million, we want to build a position and we want to cash in when it hits 1 million. All right. So look, guys, if you're looking for, like I always say, if you're looking for some mentorship, if you're looking to trade with somebody, sit by them side by side. If you're looking to have a trading partner that puts their money where their mouth is, doesn't just tell you, hey, go buy this, and doesn't buy any themselves, we're the guys. So you're welcome to come check out the program and stuff. Other than that, guys, let's call it a day. I'll see you guys tomorrow with the Friday week wrap up, and we'll go from there. Let's check the market real quick. Hey, it's fun to check the market. Hey, you see that S&P's up about 5 points now. The Nasdaq's still red. Interesting day. All right, guys. I'll see you guys in the morning.